Now, even though I personally am a huge fan of the Schwab US Dividend Equity ETF, SCHD, and own several thousand shares of this ETF across my portfolios, the Amplify CWP Enhanced Dividend Income ETF, DIVO, brought to us by Amplify ETFs, offers a much larger starting yield, some upside potential, and has even outperformed SCHD on the max time frame. So in this video, we're going to compare both SCHD to one of my other favorite ETFs, DIVO, and explain exactly what DIVO has to offer for some investors, because I think some investors out there might be missing out on a massive opportunity. So if you're a dividend investor, make sure to stick around until the end. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So before we dig into DIVO and I share with you guys how much income that ETF produces, and of course we back test it next to SCHD, the SCHD is so popular and purchased by a lot of dividend growth investors because this ETF is well diversified. With around 100 different stocks within the ETF, it's super low cost to hold on to, and of course this ETF offers some substantial dividend growth, or at least has historically. Now, for all those reasons and more, I personally, as of right now, do own several thousands of shares of this ETF and plan on holding long term and hopefully benefit big off of the massive dividend growth we're going to see, hopefully in the future. Now, DIVO, on the other hand, is an ETF that I'm sure a lot of you guys either have heard of or maybe even own, but it's not necessarily as popular, especially in the dividend investing community, compared to SCHD. Now, to understand exactly how this ETF works, this is why I invest in DIVO. Number one, income potential, comprised of high quality dividend-oriented stocks, along with covered calls and individual stocks. So DIVO is an ETF made up of around 32 different holdings, lots of familiar names in here, lots of super high quality dividend payers. I mean, we're talking names like Apple, we're talking names like JP Morgan, names like Microsoft, American Express, etc., etc. Now, if you were to just buy into some of those names on their own, you're not necessarily going to be able to generate a massive amount of income, and that's just because a lot of those names are much more growth focused and not necessarily high yield. But because DIVO offers covered calls and individual stocks, this ETF basically takes the best of both worlds by utilizing an option strategy and along with high quality dividend oriented stocks to earn a lot more yield and some upside potential along with it. Next up, it says active management allows the portfolio manager, the CWP, to identify opportunities and risks and act on those decisions in real time. Lastly, it says seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. Now, because of that option overlay, it is going to somewhat help out, especially when the market declines. And trust me, I personally have held onto DIVO in my portfolio through multiple different market conditions. And because DIVO is relatively low beta, it's always performed pretty well. Now, DIVO's net assets are around $4 billion, so it's not the smallest ETF in existence, but it's definitely not the biggest. The expense ratio is kind of expensive at 0.65%, but again, because it's actively managed, that's sort of to be expected. Now, next up, it says the objective and strategy of DIVO, just to get more of an idea of what this ETF is trying to achieve. It says DIVO is an actively managed ETF of high quality large cap companies with history of dividend growth along with a tactical covered call strategy on individual stocks. DIVO is strategically designed to offer high levels of total return on a risk adjusted basis. Now, that's exactly what DIVO has done, at least since inception. It's offered a low beta position in my portfolio basically over the past half decade, and also has offered me consistent income, while on top of that offered some upside. So at least on paper, it seems to be one of the best dividend income ETFs across the markets, and I honestly think so. Now, here's where DIVO gets really interesting, the fact that the distribution rate is around 4.81%. Now, to compare the amount of income that DIVO offers to SCHD, SCHD's yield over the trailing 12 months is around 3.5, 3.6%. So with DIVO, you're right off the bat getting much more income compared to SCHD, again, especially if you have, let's say, hundreds or thousands of shares. But also because DIVO does give you exposure to high growth names, even with the cover call overlay, DIVO has grown nicely over the last several years. Now, in hopes to have you guys understand exactly how DIVO works, the DIVO ETF selection methodology. So number one, it says dividend growers. DIVO is managed with a strong emphasis on owning high quality large cap companies with historical dividend and earnings growth. Sector allocation, DIVO is relatively balanced among the traditional 10 S&P sectors, with CWP determining which sector to cover or underweight based on various factors. Next, it says security selection. DIVO consists of around 20 to 25 stocks, which are screened and adjusted according to attributes including market cap, management track record, earnings, cash flow, and return on equity. And then lastly, my favorite part, tactical covered call writing. Covered call options are written on individual stocks, not on an entire index, and this is on a tactical basis. Now looking at some of DIVO's historical payouts, and keep in mind DIVO pays out on a monthly basis. So again, if getting paid more frequently is something that you like, which let me guess, it probably is, it sure is for me, DIVO also offers that. Now DIVO back in 2023 was paying around 14.5 cents more or less per share per month. Now in 2023, DIVO was paying around 14 cents more or less per share per month. Now last year, DIVO was paying around 14 to 15 to upwards of 16 or 17 cents per share per month. And this year so far, we have our first payout at around 17 cents per share. So not only over the past few years has DIVO paid out consistently on a monthly basis, but the payouts are getting bigger. Now digging a little bit deeper into DIVO's performance, like I said, this ETF does offer a high amount of income potential from day one, but also offers some upside. Since DIVO started trading, this was back in around 2016, the ETF has almost doubled in price, which is very impressive considering this ETF utilizes cover calls. Now again, DIVO's price performance hasn't been the most impressive thing we've seen across the market. DIVO's starting yield is also not the best we've seen across the market, but both have been very consistent, very low beta, and sort of a sleep well at night ETF, if you ask me. And now I started buying DIVO back in 2019, I think, and I've been buying it on and off ever since. So personally, for me, I'm up significantly on some of my positions at DIVO, but also I've been getting paid month after month for every single share that I own. But now to get to the good part, the numbers. Comparing SCHD's performance to DIVO's performance, and this was over the last 8.14 years with a $10,000 investment into each one of these ETFs, which again, I personally love. I own thousands of shares of both of them. DIVO over this time frame has offered a total return of around 155%, where SCHD has offered a total return of 147%, or on average around 12.23% per year versus 11.77%. Now again, these numbers are just estimated, keep in mind, but I just thought it was worth making a video sharing with you guys DIVO's performance stacked up next to SCHD, because again, I'm going to go ahead and guess if you like SCHD, you're looking for an ETF that's rather stable, offers some growth potential, and also offers dividend growth and total return. And at least historically speaking, DIVO has also offered basically all that, maybe just in a little bit different of a format. Now it's hard to say out of SCHD or DIVO, if I of course could only buy one of them, I probably still would buy SCHD, and this is just because the amount of dividend growth that SCHD does potentially offer will probably outperform DIVO, at least in my opinion, over the long term. I'm talking 10, 20, 30 years. But for a dividend focused investor that again wants some upside, wants some income from day one, DIVO is 100% a great ETF to look into. So now that we talked about DIVO, we compared it to SCHD, I share with you guys how DIVO works and even the performance of both the ETFs over the past 8 or so years. I'd lastly, most importantly, want to hear from you down below. If I were to ask you to buy either DIVO or SCHD and you could only hold on to one of them, which ETF would you pick? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.